Hello, I'm Jothy Rosenberg, the host of Designing Successful Startups, where today's guest is Vivjan Myrto.
We've gone through two really large crises where inflation went off the roof and the value of our money went to zero, and you had to survive through that. And we had to survive through two revolutions, and I had to survive a change in things. And so it's been the story of my life. I think, when you come from poor countries like that, the grit, determination, never giving up is sort of ingrained in you. I think going through cancer, it was a moment of my life where, at the time I still had a lot of plans around university and where I was going to go and how my life would look like, and everything was thrown out the window.
Vivjan Myrto is the founder and managing partner at Hyperplane, where he focuses on early stage investments in software and full stack companies, leading the firm's investments in Dover Microsystems, Soft Robotics, Modulate, Tive, Butler, and others. Vivjan bootstrapped his first software company from his college dorm room and co-founded two additional companies before starting Hyperplane in 2015. He is an active member of the Boston entrepreneurial ecosystem and serves as the director of various nonprofit organizations. Welcome to the show, Vivjan.
Hi, Jose. Hey, it's great to see you. It's great to thank you for agreeing to be on this podcast. I think you as a VC, but also as an experienced startup person yourself, will have a lot of things that the audience for this show will appreciate.
It's a pleasure to be here. Thank you so much for having me. And I just want to start by saying that I've learned just as much from you over the past how many years that we've been involved together as anybody else. So it's a real pleasure that I'm super happy that you are doing the podcast and surfacing some of the stories in the startup world.
And by the way, I want to, let people know that you're the guy that wrote the foreword for the book, Tech Startup Toolkit, which just happens to be right there.
It was my pleasure, and it was the easiest forward book I've ever read.
Okay, can you tell us a little bit about your origin story? Where are you originally from? And also just mention where you live now, but starting there.
Yeah, to start from the beginning, without going too much deep, my personal story has been, it's been long with many chapters, and in my first 40 years, I think I've lived already 5 lives. So we'll start with chapter 1, which was being born in Albania, in Tirana, which is the capital of Albania, a small country in Eastern Europe. I was born there in the 80s under really dark communism. My country went into sort of a revolution in 1991, came out of this communism, and capitalism became, sort of the system that, we started operating under. And at the time I was 7 years old, and I started my first, small business there, basically out of my grandparents' house where I grew up. Started a small, bike shop with one of my neighbors, and that was my first taste at the time where everybody was starting companies, starting private enterprises out of 50 years of very dark communism. Since then, went on to have my hands on my first computer, which was an IBM computer 2 years before Windows 3.1 was launched. And it was, very I taught myself how to code. I really wanted to play, Prince of Persia, which was a really small game at the time, in Tetris. And to even access those games, you had to know at least some basic coding. From there, convinced my cousin, one of my cousins started the first internet service provider in the country in about 1996. Convinced him to hire me as one of the first salespeople, and started selling the internet in Albania, essentially door to door, when I was about 13 years old. And I was just so enthralled with the whole idea of the impact that, you can talk to computers from city to city, from neighborhood to neighborhood. And it was just really absolutely remarkable that we can all of a sudden talk to each other from such distances through this machine that we had at home. So that was my first taste of the internet, of the technology. And same as you, when I was, 15, I ran into some health issues. I was diagnosed, with cancer when I was, 15 and a half, and moved to Italy for a year and a half in search of treatment. Unfortunately, in Albania, the treatment was available, non-existent even, and moved to Italy for a year and a half. Did chemotherapy there, radiation, Unfortunately, did not work. It actually got worse there. In 2001, late 2001, I had a relapse, and the doctors at the time said something like, you just have about a year and a half or so. My mom, which has been a single mom her whole life, said that America, I think, could be the only hope. And we started to see the options of how we come to the United States. And unfortunately, it was right after 9/11, or September, 2001. And it was really difficult. And it took me about 5 to 8 tries going to the embassy, knocking on their door, for looking for treatment. So thankfully, I made it here in December 2001, checked myself in at a local, hospital here at Dana-Farber Cancer Center. And from there, they transferred me to UMass Medical Center right outside of Boston. And there I spent about 4 years, culminating in a bone marrow transplant in 2004. And through that process, I learned English. I started to, go to college. I remember asking a nurse, it's like, how does one go to university in the United States? And she's like, well, you got to take your SATs. And I'm like, what's that? And she's like, well, here's you can study for this, and then I can help you sign up for it. And so I took the SATs and ended up getting actually a maximum score, which was lucky on the English side, because my English is still not very good to this day, but it was great on the math side. And that ended up, led me to a really good school here. I had no money. My family pretty much lost everything through the treatment and the bone marrow transplant and so on. We really didn't, my family is like engineers and doctors and so on, but unfortunately, because of the system back then, for 50 years in communism, never really had any financial wealth. After that, I ended up going to college here, and I wanted to be a doctor. My whole family, like I said, my father was a doctor, my grandfather. And so I grew up in a family where, the most important thing you can do in life is really to help others and to have an impact on other people's lives and so on. And I also wanted to be a doctor, and I had, I survived by a miracle almost. And so firsthand, understood, the impact that, healthcare can have on someone. But I realized very quickly that the path to becoming a doctor in the United States is very long and above all, very expensive. And so I really wasn't an option for me. I was struggling to pay for college. And when I got the first bill, I was like, oh my gosh, like we'd never seen $5,000 or mine $50,000 at the time. So I quickly switched to business. And in college, I was basically working whatever I could to help, my family and my mom and sister at the time. They were also working and also pay for tuition. And, through that, I started this few other businesses, small ones, and I was working whatever I could. And then eventually started an enterprise software company and sort of rediscovered my love for technology. We discovered my love for, how impactful software can be, how impactful, a few lines of code that can be. Most importantly, it was like that proverbial, light bulb that people talk about. For me, it was simple, as like few lines of code that can impact, tens of millions of people versus 10 patients at a time. And so never really looked back since then. This was around 2005, 2000. Basically been on this journey. My American journey has been one of survival, has been one of a lot of hustle, and most importantly, also a lot of luck. Luck has such an important role in everybody's life, and mine certainly has been very fortunate, to move to the US. And I was fortunate to have a great roommate who was a brilliant engineer to this day. And together we built our first business, which was a healthcare record company. Of the same struggle that I had moving to the United States at the time of transferring all my records of, all those years of chemo here. So, we sold that business, a bunch of years later. And I can talk about the reasons why, but one of the most important things in business is certainly partnerships. And I learned a lot about partnerships through that journey of my first company. And eventually my business partner and I didn't see eye to eye of how to grow the business from there. And, the opportunity cost has become much higher in different areas that we were excited about. So eventually sold it to to a private equity group that owned a lot of the customers that we were selling to. We mostly had European customers. And, from there, I tried to start a second business that was, that's where I learned basically my second company, learned what venture capital was, 2007, 2008 timeframe, 2009. And, when venture capital came in my life, it was like, oh my gosh, like, what do you mean? there's somebody in the world that is willing to invest in a company without revenue. It just seemed like such a thing. I mean, growing up where I grew up, it was like banks, and you had to have so much to borrow money and to start your companies. And what do you mean? Like, there's other ways besides bootstrapping to start a business and going to the bank when you have 10 million in revenue, right? So I was like, oh my gosh, this is incredible. I was like, I couldn't believe it. And even to this day, I still get goosebumps, when I think about the work that I do today. It's like, we're always looking for, the future in a way. We're always looking for impact. And, unlike starting one company at a time, venture capital, sort of give me the opportunity, it gives us the opportunity, to really have an impact across so many different industries and to have an impact across so many different technologies. And sort of, you're always on a forever hustle to find the next big idea, but most importantly, the next big founder. So it's just absolutely a privilege to be part of this industry and to do the work that we do. So that business basically learned by venture capital in Boston at the time, very different community than it is today. And it was, just a bit harder for someone like me that did not eventually graduate college and had spent so much time just building versus the networking and all that other side of building companies. And eventually we started a small nonprofit organization here to meet other people like myself. And I was knocking on the doors of people like General Catalyst and Start Capital and so on with no luck at all at the time. And but that nonprofit led me to build a really good, community around myself. And so that community started to really see a lot of opportunities here, and eventually I became an angel investor, investing in some of these companies that were coming through that nonprofit. And that led me to start Hyperplane in 2015. So I'll pause there a little bit because it's a long story and there's so many chapters and so many places where you can dive in further. But, the second chapter of my career now has been going on since 2014 when, we incorporated Hyperplane for the first time.
I'll definitely come back to Hyperplane in just a second, but I just want to ask about your grueling health challenges that you had to go through and living in the hospital for such a long period of time. I always talk about, on these episodes, I always talk about grit towards the end, but we have to talk about it at the beginning in your case, because how did that manifest, all that experience manifest itself in you, and how did it change your personality? How did it toughen you up for whatever else you've gone through since then and might go through in I know when I see you sailing in December, first I think you're crazy, but it's also an expression of grit. Sailing is a gritty sport, and sailing in December is extremely gritty.
Yeah, and that's a hobby that I picked up many, many years ago now, through actually one of our founders, one of our first investments at Hyperplane, and something that we share together. Yeah, I mean, I think for me, it goes even further back. I think certainly going through a very existential health situation that I have with cancer and given a year and a half, it changes a little bit sort of the timelines that you have in your head and the plans that you might have for your future. I think that one thing, through that, I mean, even when I was in the 80s and the 90s, that early in my country, we just had to go through so much. I mean, we've gone through two really large crises where inflation went off the roof and the value of our money went to zero, and you had to survive through that. And we had to survive through two revolutions, and I had to survive a change in things. And so it's been the story of my life. I think, when you come from poor countries like that, the grit, determination, never giving up, it's sort of ingrained in you. I think going through cancer, it was, it was a moment of my life where, at the time I still had a lot of plans around university or where I was going to go and how my life would look like, and everything was thrown out the window. And so you start to become a lot more reactive to the current situation than try to plan ahead and be proactive. And something that even at Hyperplane, we're always saying that we have to be the best at reacting to the future versus try to always predict react to the present versus always predicting the future, right? The future is happening faster than ever before in my line of work. And so we just have to be really good at the future. And, I still to this day, it's ingrained in me that I still have just another year and a half. And so everything I do is faster, is a lot more intense, and just want to live as much as I can and enjoy as much as I can. If that means sailing in December in 0-degree weather, so be it. I'm not going to miss that, and skiing and kite surfing and everything under the sun. So, it's really important for founders, to never give up. I think that's really, really the most important thing. You can be a terrible business for 5 years, and year 6, you own the world, right? So it's just so important, to never give up. And I've learned so much from you about not giving up, and going through the Dover journey together has been, an amazing one in many ways of grit and determination. So, we will never give up. And I think that, as long as we have a big North Star, it's important always to have a big North Star, someone that probably you can never reach. But we certainly do have it, our firm here, and that manifests in my life as well.
Hi, the podcast you are listening to is a companion to my recent book, Tech Startup Toolkit: How to Launch Strong and Exit Big. This is the book I wish I'd had as I was founding and running 8 startups over 35 years. I tell the unvarnished truth about what went right and especially about what went wrong. It's for the founder, the CEO, and wannabe founders of tech and non-tech startups. You could get it from all the usual booksellers. Now back to the show. So Hyperplane is seed. You focus on seed stage, and you like hard tech. And those are 2 really important combinations. They don't always have to go together. You can do seed stage and say, I like SaaS or something, but you guys have combined those 2 things, and it kind of is related to the name you picked too, right? A mathematical concept.
Yes, correct. Hyperplane started really we incorporated in August 2014, and we launched our first fund in 2015. And we were one of the first funds in the United States that, well, let me backtrack. The way that Hyperplane started was on 2 main, sort of theses. Number one was that we believe that pre-seed and seed stage will be a lot more institutional over time. And I think at the time you can already starting to see, the cost of getting a company off the ground coming down with cloud computing and so on. And certainly true today. Pre-seed and seed is now, there's so many more participants, large and small. And then the second thesis that we had at the time was we really wanted to build a firm where we can attack really large problems in the world. And at the time, we looked at certain different areas of what would be the best way to solve, some of these problems in the future. And it became clear that artificial intelligence, machine learning, was really going to come out of the MIT labs, Stanford labs, Northeastern labs, Harvard labs, was going to come from all of these research labs into the real world, right? So we built the firm basically with these 2 concepts. We wanted to be a seed investor, to invest in companies from the very first day to about $1 million in revenue or so. And that's, fluctuates a little bit, today as the firm has grown. But certainly we've always stayed true to being B2B and attacking really large problems in the world. And large problems in the world are both on the industrial side / deep tech, which we're one of the first ones to do that, and also on the enterprise side. With that, the firm has attacked things like we're big in agriculture right now, water management, water supply. We've done cybersecurity together on a chip level even. We love companies that leverage sensors. We love companies that leverage hardware. In the beginning, Hyperplane 1 was sort of the first chapter of what today is artificial intelligence, which was so much more about building, the ecosystem, building the infrastructure of AI. And that meant to invest in some things that were a little bit more too deep tech, that what a seed fund should do for the capital structure that we operate under. But also, moving up the stack, simple software businesses and so on, and somewhere in the middle as well, more infrastructure type businesses. So for us, the mission is always to solve really large problems for society and big industries, to go in industries that technology hasn't gone yet, and try to make those businesses more efficient, better, and larger. And attack it from an AI perspective, because we believe that automation is the force that is going to really drive a lot of these industries and small businesses forward. Then yes, Hyperplane, it's actually like, it is in geometry is a subspace of a vector space, and it's used in things like machine learning to support, vector machines and convex geometry and so on. So it's a very technical name, but even when it gets confused to a very fast plane, I really don't mind it.
Typically, a VC firm, as it grows and the size of the next fund gets bigger, it gets harder to do the early stage
because you need to put more money to work. Do you guys have because, the fact is, unless you kind of fall flat on your face, you're going to grow. So what is your plan for that? Will you stay seed stage?
We love to say seed stage. So the way that we look at the industry, there's two business models to venture capital. And I think it's way more acute today. On one hand, you have firms that are really focused on making multiples on their investments. So intrinsically, those firms tend to stay small. They're very early stage, seed stage, Series A's firms, funds usually typically less than 500 million or so. And then now you have also this other part of the market, which are, these aircraft carriers, if you will, that have, tens of billions of dollars under management. Some names like Andreessen Horowitz, most recently, not most recently always, but, the largest fund to date, 9 billion general capitalists, Sequoia, that basically under one roof, they offer everything. And I think those firms, tend to be focused on different types of returns, that we are. So, I think Hyperplane, we also have a lot of our own capital in the firm, and we absolutely love early stage investing. It's who we are. It's in our DNA, and we love businesses that are starting, and that's been our bread and butter. And we envision the firm in the future to still continue doing, just very early stage. And we also have a thesis that early stage investing, it's going to be, it's going to be cheaper and cheaper for companies to build. So, an early stage company can still maybe 3 years from now mean that the business has 3 to 5 million under revenue versus zero today or a few $100,000. AI is really impacting the venture capital industry in a way that it's cheaper, easier, faster than ever before to launch a product. You're not going to need as much capital in the future to get to 10 million in revenue. So we believe that a $250 million fund is going to be the new $1 billion fund in the future. And we want to be always sort of on the early stage side because it's also what we know what to do.
When you're at the seed stage, you tend to invest in a person or a small team of founders and a big idea. And so one of the things that means is that you're dealing with someone who has this passion for this idea, a problem that has just been very difficult, and they have a solution for it. But they're not necessarily, in fact, they're rarely experienced CEOs. And so they're going to have gaps in what they know. How do you guys deal with that? You got a team there, but I haven't actually seen, you operate in that sort of mentoring, coaching kind of environment.
I think that's a great question, and it's something we think about all the time. And, the framework around that has changed, for me over the past decade as I've become, as I've grown in the industry and our portfolio has grown, and we've seen, so many, successes and failures and so on. And I think, before we even start, before we even have an investment, I think, sort of our philosophy has always been, we value more the soft skills of the founder versus the hard skills, right? We value like EQ a lot. We value histories of the founders and their lives a lot. We always want to invest in people that, the company that they're building now is sort of their life's work. And, obsession around that product really drives returns and build big businesses, because when you're building a company, you're going to have 10 bad days and one good day. And in those bad days, I think that obsession, I think that mission that is really at the core of these founders is really what's going to drive the business forward. So we love founders that are visionary. We love founders that, care a lot about the culture of the company that they're building. We love founders that are really good at sales. It's really important. So I think even in venture capital, some of the best venture capitalists in the world have to be really good salesmen. And I think it's not as talked about, but founders and ourselves, we're always selling an idea. We're always selling a product. We're always selling, a fund. It's really, really, really important for us. And I think that it's never to be discounted how important it is to have a founder market fit. So the founder of the business has to know the industry that they're going into incredibly intimately and have very unique insights into the industry that they're going to. Because at Hyperplane, we certainly believe that market and founder are the most important things to invest in. If it's a big market and the market dynamics are certainly favorable for a new company to really grow large, and the founder knows that business is obsessed with what is building, I think that's really, really powerful for Hyperplane. And no founder knows everything. Every founder, needs something, at the early stage. So at the early stage, firms like us compete on what we offer, I think, more after the investment. So the servicing part, of the deal. And that means that, and at growth, sort of the difference between the early stage and growth. At growth, I think companies typically have already figured out all of their motion, product marketing, sales and so on. So, the firms that want to, invest in a $70, $100 million round, that typically are competing more on price and brand and network and so on. But with us, we're competing, we're offering, Hyperplane is always specialized in one thing only, which is go to market. We tend to invest in founders that, are very intimately involved with the product. They know the product, they know the team, and they have sort of figure out some of the pieces already. And if not, they have a good idea, where this is going to go. And our job is really, it's really to take this company from those very early days, to millions in revenue. And so we focus a lot on the go-to-market sales, and that part of the business after the investment.
Startups at the early stage, of course, as you know, are fragile. That's just the way it is. And what do you think is, the one or two most dangerous situations, risky situations? And I don't mean obviously running out of cash, but I mean something else that you see, or maybe you've seen multiple times. What do you think that kind of situation is risky?
Yeah, I think at the stage that we invest in, the whole situation is very risky. Like, there's so many risks all the time. And our job is to try to squeeze this risk out as much as we can early on and identify, this risk early. But I have to say that for me, actually, the most important, stage and the most risky stage is when the company is starting to do well. Once you're feeling good and everything is clicking and you have product market fit and the customers are banging in your door and investors are banging in your door, is where we've seen the biggest mistakes that people have made. And so that is really, really, I think, the most, it's the hardest time,
Why do you think that happens?
Because I think a lot of founders might get a little bit too, sure of what they're building, might get too sure of themselves, might get a little bit ahead on valuation of the company that can hurt them in rounds after that. There's a lot of things that happen when you're, at your highest peak, and those highest peaks never last. There's always going to be, a little bit of a coming down from it, right? And it's really important to build a business for the long term. And when you're really starting to hit your stride and you're doing maybe 5 to 10 million in revenue and you're growing 3 times year over year and your margins are looking good and so on, that's where you really start to fumble and new competition can come around, or, maybe a large incumbent is starting to really snoop into the space. And so that's really I think the hardest time and the most, thing that worries me the most, and when these companies are really starting to hit their stride. I think when they're young, certainly there's a lot of, things. And I think on average, a company, makes about 3 really big decisions a year, be it with team, product, or strategy, right? And, we're there for the ride, and that's fine. And you're going to fumble. It's not a big deal. We can be there for a bridge round or whatever, but it's really when they start to really hit their stride and people are knocking on their door and they're giving you a $200 million valuation on a few $1 million revenue, that's where you really start to worry. And we saw this manifest over the past, 2 to 3 years, 2020, 21, 22, which Hyperplane, we took a little bit of a different approach to those years, and we slowed down and we were a lot more disciplined than some others. You've seen it, and now they have to recorrect and they have to do down rounds. Their cap tables are looking bad, and the founders are losing a lot of their own equity, and and it gets really messy. So you got to really be thoughtful, not just for the next year, but what about the next 10 years and how the markets can go. And markets are more volatile than ever before, macro, both geopolitically. And I think there's just so many things happening in the world that, make this business is so much more volatile. You just have to plan so further ahead and always be, not to get ahead of yourself.
One of the things I try to make sure when I'm talking to founders is to make sure they understand the VC's business model and how it works, so they can understand the VC better.
It's a really, it's a really great point that we talk about it with our founders all the time. So, at Hyperplane, for example, before, we sign a term sheet together or we get into a deal together, no matter if somebody else is leading or we're co-leading or, we're the sole lead or whatever have you. We always talk to the people, talk to the founders around what are the milestones? What is it going to take, for this company to get money from us again? That's really important part of the journey, because we follow on the rounds and so on. But most importantly, also, we're very, upfront about, founders, that sometimes you don't need venture capital. Is venture capital, it's not for everyone. Once you get money from us, like, you're on a treadmill, you're on a treadmill to build a really large business, fundraising all the time, really go at all costs, right? And sometimes, it's fine to build a $10 million run rate business. You own 100% of it and you sell it for, I don't know, 10 times revenue. You're making $100 million. That's life changing, right? And not everything has to be a unicorn, right? And it's fine if you don't take venture capital. So what we're trying to tell people is, listen, it's, once we have a term sheet together, you can never, get rid of me once we're in this journey together. And it's a very long journey, right? So it's really important, for the founder to understand sort of my alignment, long-term with the business and what they're in for, many chapters from this first one together. So, and again, we're very upfront about that. It's a long journey. It is so many ups and downs, and, we can be together for 10 years, 15 years, and who knows, right? And at Hyperplane, we always say that we want to be here, for your first company, to your second, to your third, and we want to be a lifetime partner to most of our company, to most of our founders, right? Because the majority are very young founders, and they have a very long road ahead. And so we want to be there for the whole journey. Venture capital is not for everyone.
Yeah. And all of what you said, I agree with. The other reason I like to bring that up is because it helps you understand what the VC that you're working with has to spend their time on, what their time allocation is. For example, aren't you in the middle of raising a new fund?
I cannot speak about it, but we have 3 funds under our belt now, and 80 companies or so that are valued to over 4 billion. And, so there's a lot of businesses. And I think how I look at my time is more important to think about how many other boards I'm in and how much time I'm going to spend with you when we're on the board together, if I join the board, which we typically do, right? And most importantly, also, venture, either way you look at it, tends to be a bit of an individual sport. A certain partner at a firm has a certain expertise, be it in the area that you're in, or maybe something that you want to learn more about. So it's really also important to find a good chemistry, with your board to really complement, some of the shortfallings that you might have, right? Be it on the go-to-market side or network or something might have you. So I think that's really important. I think founders always should make, reference calls. And I know it's a bit of a cliche and many don't have that luxury, but, you should always really understand a little bit who are you getting into your company. And founders should think about, when you get money from a VC, you're actually recruiting that VC to work for you. So it should be the same framework. It should be the same sort of methodologies, like just hiring on one of your team. You're hiring basically an executive on your team when you're getting money from us.
Well, okay, forget about when you're raising a fund, but you are also tied to a bunch of investors, your LPs. How much time do you spend, of course, across a year communicating with, having meetings with your limiteds? Because that's almost invisible to your portfolio CEOs.
It's a really important part of our business, that our LPs, we're fortunate that we have a lot of institutions and, university endowments and foundations and so on. So it's really, really important for us, who our LPs are and who are we making money for. Most importantly, I think we're also pretty transparent and with our founders who are LPs. And I think over time has gotten, a little bit more, smaller and smaller group, which is sort of a little bit by design. And, we, just like every other firm, we have an annual meeting once a year, where our LPs attend. And in that meeting, we invite also, a lot of founders. And I think it's really important because, our limited partners certainly sit on boards of much bigger, firms like us. And we have, we get a huge wealth of knowledge from them doing, our business, investing in our asset class, some of them for 40 years. So we've learned a lot from them that brings so much value to me, the way that I might bring value to another company. And I think that they also bring a lot of value to our founders. Their network and expertise and knowledge of the space is remarkable. So we always encourage have exposure to our LPs, and our LPs have exposure to founders as they grow and so on. So I think on a yearly basis, let's say at a monthly basis, I probably spend 2 to 3 days every month communicating with my current investors. And Hyperplane is a position now where we have a dedicated, investor relations person here that her full-time job is only to communicate and with LPs and, manage those relationships so that I can focus more of my time on sourcing and building on board and on the investing side of the business.
I think everything we've just covered is extremely useful information to existing and future startup founders.
Yeah, I'm a founder myself. Hyperplane is my startup, so I have had to learn a lot of the, what I know from other podcasts and other books and other people helping me as well. So, I'm always, I'm always a fan of just mentoring and sharing what I've done wrong.
That's why I was able to fill a book, because I made so many mistakes. Well, anyway, thank you, Vivjan. I think we've done a nice episode here, and I appreciate you taking the time.
I appreciate having me.
That's a wrap. Thanks for tuning into this week's episode of the Designing Successful Startups podcast. Check out the show notes for resources and links. Please follow and rate us at podchaser.com/designing successful startups. Also, please share and like us on your social media channels. This is Jothi Rosenberg saying, TTFN, ta-ta for now.